Good afternoon and welcome to Markets Today. My name is Mbitha Mwema and I'll be your host this afternoon. Now it's Wednesday, it's midweek on the Nairobi Securities Exchange. It's been a very slow day, slightly muted activity with regards to investor engagement. It's been very slight trades that we have seen today, with the dominant players, rather the dominating trades for the day being the names that we hardly ever hear of. We will be giving you an update of that as well as what to expect as we get closer to the end of the week. Over and above that, the government of Kenya, through Treasury, which acts as a steward for the fiscal side of the government of operations, has come out earlier today and extended the budget for this financial year by 3%. What does this mean for the fiscal deficit? What does it mean for you as a taxpayer in this kind of economy that we are operating in? Again, a bit of update that we will be sharing later on for you. And finally, we'll also be looking at the foreign currency market. What is happening to the currency with regards to the exchange rate trading vis-a-vis the dollar? We have seen a bit of strengthening. What is the level we are trading at, and what do we expect in coming days? And more importantly, what is driving this point of trade that we are currently seeing in the market? These are the three key things that we will be discussing in the Chit Chat. Later on in the show, we continue to look at Equity Group, which announced its third quarter 19 numbers yesterday. Now, profit after tax was up 10% to 17.45 billion. We want to unearth what were the drivers for these numbers and what do we expect to see. We'll also delve on management sentiments with regards to the new operating environment, where we have a total rate cap repeal. It looks like the conversation of a rate cap repeal still remains of sort of a hush-hush situations. We have not seen the tier one banks come out strongly and actually express their position. So it's still wanting, and it's very unclear for you if you're a borrower in this current environment to know whether to expect a revision upwards of your cost of credit in coming weeks, or if to actually expect this to only apply to new people who come into the funding loop from the banks. That's a conversation that we will be discussing later on with Mr. David Kingo, who's an investment analyst at Saiton. Now, let's come back to the news of the day. As we mentioned earlier, turnover is muted on the Nairobi Securities Exchange today. Britam, which hardly ever trades, is the top traded stock with about 2.3 million shares traded at 7.58 shillings. Now, this is a slight improvement on its price yesterday, about a 2.5 percentage point improvement on its particular price over the day. The traditional movers, Safaricom, KCB, Equity, sometimes EABL, have been quiet over the day. KCB has also traded about 2 million shares. Safaricom has seen about 1.2 million shares traded. Nothing much happening in the market to actually excite investors, and we're beginning to see the tapering down of volumes that are happening on the securities exchange as we get over and above the cycle or the excitement that had been relegated to banking stocks on the occasion of the total rate cap repeal. In other words, this is a period where we normally expect the market to soften as we get to the end of the year. So unless we see any other macro trigger points, we don't expect to see volumes going back to the levels that we witnessed over the last 2 to 3 weeks. That said, Equity Bank did announce its numbers yesterday. The net revenue was up 10% year-on-year for the third quarter 2019. The group reported a revenue after tax, rather profit after tax, of 17.59 billion. Now, this was more or less expected, and we have failed to see any impetus for investors to actually come and rally up the price over the day. The key thing that has rallied up this particular bank, as well as the other Kenyan banks, was the conversation with regards to the total rate cap repeal. Now, that news is behind us, and we don't see any more trigger points with regards to the price. And if anything else, we continue to see continued profit taking as investors sell out of their stocks and take profit as they await to see the fundamental shift in earnings, if any, based on the total rate cap repeal. At a macro level, the Treasury has come out and amended, or rather requested Parliament to amend the fiscal budget for the full year 2019-2020 by 3 percentage points higher. Now, they are looking for approvals from Parliament to extend the budget by about 86 billion, with a reallocation of expenditure towards development expenditure and a slight reduction on recurrent expenditure. Now, this is a far cry from the fiscal consolidation reviews that we have been hearing and demands that we have had. And earlier on, Treasury had actually come out and said they were looking to revise downwards their total expenditure for the year by 2%. Now, it's all up 3%, and they will be looking for approvals from Parliament, which we think they'll more or less get. Once they get this, there will be a slight negative impact when you're looking at the fiscal deficit as a percentage of gross domestic product, and this is a key parameter if you're looking at the investment case for Kenya. The current estimate that we had from the initial treasury statements that we had seen earlier in the year was a fiscal deficit of 5.9%. Now, based on this upward revision, this deficit could slightly worsen to about 6.3%. Now, this conversation of fiscal consolidation, it's still a sort of a sour point when it comes to Kenya, because yes, we are developing, the government is spending on infrastructure, but the government is spending a heck lot of money, as some people would put it, a lot of money on recurrent expenditure being wage bills, being money that is transferred to the counties and the constituents in the county level. Really, we're just spending too much money consuming as well as rather than putting it into development. So certainly a 3 percentage point increment is not beneficial for the economy at this point in time. In other words, if the deficit continues to get wider at 6.3%, then expect increased pressure on domestic borrowing as well as foreign borrowing. But more importantly, expect additional pressure on the tax collection obligation by the Kenya Revenue Authority. What this simply means for you is expect to start paying a lot of taxes, either when you go to the supermarkets or if you use your airtime, expect slightly higher taxes on that. If you're running a business, the KRA has actually come out and said they will start collecting presumptive tax. In other words, if you had made an estimate of how much revenue you're going to actually project for your earnings over the next couple of months, KRA will be on your beck and call demanding that you pay at least 3% of your projected revenues as opposed to paying for your actual revenues. In other words, whether you've made money or not, the KRA will certainly be up in arms asking you to pay for this presumptive tax because the government does need it to actually keep funding a widening budget deficit. This is a negative for us, a slight negative for Kenya, because you cannot keep running an economy on a widening budget deficit, yet there's no clear visibility, no accountability for how much is being spent, where it's been spent. And also the debt burden is becoming increasingly higher and harder for the common mwananchi, but more importantly, the tax burden is becoming much, much higher for you and I. The question is, will this be a trend? We are waiting for the budget statements for the next financial year, and that is full year 2020-2021, to see if this whole conversation of fiscal consolidation, A, is it actionable? B, what will Treasury do in this regard so that we can be able to see whether we are moving in the right direction, or is it just a hearsay to make it worth the while of the stakeholders who are constantly looking at the investment case for Kenya. Finally, we are looking at the foreign exchange markets. We've seen a very good strengthening path on the currency against the US dollar. Yesterday, it did trade at about 102.05 to about 102.25. This is a currency that's coming from a level of about 105 in less than 2 to 3 months ago. What has been strengthening this? Now, the rate cap conversation that happened in Parliament and going through that process of 2 weeks of debating and making adjustments to the finance bill and finally taking a vote on this and repealing the total rate cap repeal in the Finance 2019 Act has been very beneficial for the Nairobi Securities Exchange. We've seen a lot of foreign investors are finally coming back to this particular market and buying the stocks in droves. We did see some of the stocks close up 25% by the end of October. This was Equity Bank, which was up 24%, KCB was up 23%, Cooperative Bank was up 22%. So very exciting times there for the banks, and largely the currency has been bolstered by the fact that the foreign investors are coming into the market. Looks like 102.05 could be somewhere that we trade at least in the interim, but then once we get to the end month, probably expect a slight correction to maybe 102.5 or 103, depending on the demand for the hard currency for when local manufacturers, when they need to import inputs for their manufacturing works. And finally, just touching again on the investor sentiment, the foreign investor sentiment, we have seen the MSCI index, which is an index that covers the most liquid stocks on the Nairobi Exchange, and it's an index that most foreign investors tend to use for their purchases in this country. We have seen a notification from them on 2 accounts. Firstly, it has the MSCI Emerging Market Index that has, MSCI Frontier Index, where Kenya is a constituent. The companies in Kenya that are in that index are Safaricom, Safaricom, KCB, and Equity Bank. Now, of these three, KCB, there has been talk of KCB being dropped from the MSCI Frontier Index with regards to its representation of Kenya. If it is dropped, it is going to be dropped to the MSCI Small Cap Index, and this will happen from the 26th of November. Now, this is a bit of a negative element when you're looking at KCB, because in a way it actually underranks KCB compared to Equity Bank. And if anybody has actually been investing in this index or using it as part of the core of their investment case and their investment ethos, then they will be certainly mandated to actually sell out of KCB in the interim and reallocate maybe to either Equity or Safaricom. So certainly expect some downward price pressure in the coming days, especially towards the end of November and the first or 2 weeks of December before we take an actual break for the December holidays. The second thing that the MSCI has done is get Cooperative Bank and Barclays Bank out of the MSCI Small Cap Index and totally remove them from this index. And this occurs from the 26th. In other words, from the 26th or thereabout, expect also to see downward price pressure on Cooperative and on Barclays Bank for some of the investors who will be compelled by their investment ethos to actually sell out of these two stocks. In other words, if we continue to see foreign investors continuing to come into the Nairobi Stock Exchange, rather Securities Exchange, then maybe Safaricom and Equity will continue to be the bigger beneficiaries in the medium term, given the visibility that they get from the MSCI. The MSCI in its considerations tends to look at, number one, liquidity, and the second most important thing they look out for is free float. In other words, are there shares that are readily available to be traded in the market? If these two things are not pertinent, then that's when they tend to have revisions with regards to the constituents, and then they get either they make a revision and get you out of one particular index or to another, or they totally get you out of the index. For KCB, the element would be a free float. The free float has suddenly become reduced over time, and that could explain why it has moved from one higher ranking index into the lower index. For Cooperative Bank and for Barclays Bank, liquidity and free float have also been a problem over time, and that could explain why they have been revised and removed from this particular indices at this point in time. Now, let's go back to what is happening in the bank. So if investors are going to continue looking at Safaricom as well as Equity Bank, what is there in Equity Bank? 10% earnings growth. Could this double to 20% next year, given no rate cap repeal? Do they have the wherewithal with regards to balance sheet strength to be able to aggressively go and extend credit to the private sector? And finally, if they have the wherewithal, can they be able to price it at a return that actually enhances your value as a shareholder? Should you buy it today? Should you hold on to it? Should you sell it? That's a conversation that we will be discussing and getting deeper into it once the break is over. We'll take a short break to look at the daily commodities. When we come back, we will be joined in studio by Mr. David Kingo, who's an investment analyst at Cyton. Don't go anywhere.